Welcome to this week's video where I discuss what I believe is important for individual investors to think about over the next 5 to 10 business days when they make their investment decisions. Today I'd like to talk about the 10-year bond rate. Both 10-year bond rates in the United States and Canada have gone up substantially in the last few weeks. What does this mean for individual investors? Corporate earnings season. The kickoff to this quarter's corporate earnings season really starts with the US banks, and they're going to report over the next few days. What are they going to say and other companies going to say about how they're doing? And finally, where are investors' dollars going to go over the next few weeks? We've seen money flowing into oil. We've seen money going towards technology names. Where do individual investors think money is going next? If you could figure that out, that would be the best recipe for success. The 10-year government bond rate, both in the United States and Canada, has moved significantly higher over the last few weeks. A lot of talk from the Bank of Canada and the Federal Reserve in the United States has led us to believe interest rates are going to move higher and much quicker than first anticipated. Thus, the 10-year government bond rates have now gone over the 2.5% mark, when just a few weeks ago they were under 2%. What does this mean for individual investors? Well, I can tell you that certain sectors of the market do not like when interest rates move higher and very quickly, such as technology and other interest-sensitive sectors. So going forward, do we look at these interest-sensitive sectors? Perhaps being a contrarian might make sense at this time. Perhaps we put more money towards some of the sectors that have been beaten up just because individual interest rates have gone higher. That is something to consider, in my opinion, for many investors today, putting money in the areas that have been beaten up the most, that it still remain good quality investments. Corporate earnings season is about to kick off with the US banks reporting earnings in the coming days. Although we have seen a few corporations report earnings recently, some of the tech names like Micron or Nvidia have reported in the last few weeks, and their earnings were very strong. What will the US banks report? I think everybody is guessing from poor numbers to great numbers and everything in between. I think there's a lot of complacency out there. I think there are a lot of individual investors thinking that these sectors will continue to struggle as interest rates move higher. Although bank earnings should benefit from higher interest rates, we've seen the banks struggle mightily, with some of the US banks at all-time lows, or at least at 52-week lows. Going forward, I would look for banks to report better earnings than expected. I actually would look forward to some of the big tech names reporting good quality earnings as well. If the last few tech earnings were any indication from some of these companies, I think that we could see some pleasant surprises going forward, and I think individual investors should consider these names as a contrarian investment idea. Probably the best hockey player of all time, Wayne Gretzky, always said, "You want to go where the puck is going to go, not where the puck has been." And I think that is true for individual investors as well. We want to know, or we want to figure out, where is the money going to go, not where it has been. We've seen over the last month or two that the price of oil has gone well over $100 a barrel. In fact, over $130 a barrel at one point. And individual investors that bought into the oil sector prior to oil going up made quite a bit of money over the last few months. Now we've seen the price of oil drop below $100 again. So is it time to buy oil? Or is it time to buy one of the other sectors that perhaps has been beaten up, such as technology, banks, retail, or any other of the reopening names that we talk about on a regular basis? In my opinion, I think you want to try and figure out where the money is going, not where it has been. As I've mentioned already in this video, being a contrarian investor allows you or affords you the opportunity of doing just that. Be fearful when those are greedy, but be greedy when those are fearful. When people are selling, maybe that's the time to buy. And so I think as individual investors, you want to find good quality names that people have vacated or moved their money out of. And maybe those are the names you want to choose for your portfolio. Always stay diversified, but perhaps put a little more emphasis on some of the names that you think will do better in the future, not necessarily what has done well so far. And I think that always is the recipe, or the best recipe, for success.